also acquisitions and investments in general. Back in June, we had a story, man, saying that as much as 25% of the company could be sold, and that was actually given a valuation to the company of around $1 billion. So that gives us an idea of the whole size of the company. All of this deal, everything that we were expecting to happen a few months ago has been delayed because of the politics in Israel and everything that's been going on in the past 3 years in attempts to form a government and to actually move on with this potential deal. The company, again, just a quick overview of what they do. They are a defense contractor with business line that includes drones, missiles, and also defense electronics, and they had revenue of about $4 billion just last year.
And Western Union picking up 15% stake in Saudi Telecom. So what's the driver for this deal?
This was an interesting deal to see details coming up over the weekend here in the Middle East, man. Yes, Western Union bought a 15% stake of a unit of Saudi Telecom, the major telecom player in Saudi Arabia. The name of the company is ST Pay, and they are basically focused on digital payments and also financial technology services. The stake was bought for $200 million, and that gives the value to the unit of STC of around $1.3 billion. If we look at the stock of the group company STC in Riyadh, it's up 5.3% so far in 2020. That's better than the index, than the Tadao index. It's a slight outperformance, and we can see good reaction and a positive performance for these shares in Riyadh today, Menace.
Okay, Felipe, thank you so much. Felipe Pacheco there, our resident equities reporter in Dubai. I want to take you to the US equity market because we stand, as always, between the juxtaposition between antibody deals being done on the pharmaceutical side, more vaccine news. But this is the S&P 500. Now, this is the performance on the week. It gave back just under 0.6%. But what belies the narrative here is you are looking at an 8.8% run on the month. That's the best since 1980. And I can tell you, in 1980, one of the best-selling singles was Don't Stand So Close to Me. That was by The Police. By the way, they went on to have a number of hit singles in that year. Not that you're here for the music, but you're here for the money and the flow. And I can tell you this, $53 billion went into stocks so far this month. Looking past the chaos, throwing the money. The liquidity has got to flow somewhere, said James Reeve from Citigroup. ETFs, the biggest weekly inflow since 2016. However, I leave you with this thought. Short interest on this market is the lowest since 2004. We are at extreme positioning. Can it endure? We will discuss tomorrow. This is Bloomberg.
Bloomberg ETF IQ Europe. I'm Francine Lackwin. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Shot in the arm, stock ETFs listed in Europe have already had their best month of inflow since January on hopes of a post-COVID return to normality. Equities could overtake fixed income by the year end. Ethical investing for universities and their multi-billion-pound endowments, while we speak to asset manager Amundi as they launch a carbon-free global equity fund. And it's the biggest company ever to be added to the S&P 500, but plugging in Tesla is causing $400 billion headache for index tracking funds. We'll bring you the story. Well, first up, let's discuss some of the week's flows. Buoyed by news of 2 coronavirus vaccines, Europe-listed equity ETFs are on course for their best month since January. Stock funds have seen more than $5.7 billion pour in over just 2.5 weeks. Now, that compares with $1 billion of inflows for fixed income. According to Bloomberg Intelligence, seasonal momentum could push equities ahead of bonds for the year as a whole. Well, joining us today is Michael John Lytle. He is Chief Executive and Founder of Tabula. Thank you so much for joining us. MJ, what's your take overall about the direction of ETFs from now until the end of the year?
Well, thank you, Francine. There's no question that equity flows are catching up with fixed income, but we have to put this in perspective. Over the sell-off in March and April, both markets saw 15 to 20 billion of outflows. Fixed income within weeks started to see inflows and has outpaced equity inflows throughout this year until today. Equity inflows didn't really restart until June, so there was a 2-month gap between April and June for fixed income and equity. Equity is catching up and now matching fixed income, but remember, historically we had double the inflow into equities of fixed income. So to match past flows, you would actually have to see equities make a massive gain over the next month.
Jay, I mean, could we see those massive gains? And if, we don't, what could be the catalyst if it were to happen?
Anything could happen, but, here we are on November 18th. We've got about a month until markets start to close down, people close up their books. I'm not sure there's the risk appetite for people to significantly increase their equity positions. In general, I would say people are looking at the year end and starting to worry about year end liquidity, starting to think about how to protect any gains that they do have in their portfolios. I think in general, we're going to see people repositioning between the various risk positions, but highly unlikely at these levels, which are elevated. Remember, we are at levels both in the fixed income and equity markets, which are beyond where they were before the sell-off in March. And so people are already pretty heady in their expectations of where the markets are and where value is. So I think I think the market in general would be surprised if there were another massive inflow into risk assets.
MJ, I don't know what you make of Bitcoin, or if there's a way to trade Bitcoin through